Hello, this is Dave, and welcome to Equity Story. And I'm here with the Wolf, and this is just general share advice and not personal advice. Wolfie, pretty quick today, mate, because the market is looking a little bit drab. But I think the biggest advice we can give our shareholders, our members of Equity Story, is really just how you feel this market is going to play out, maybe over the next month or so. And if you're taking a general view of what's going on, there's certainly an issue in America, especially at the moment, with a lot of these regional banks. My gut feeling is that, Wolf, this has got another 2 or 3 weeks to play out. Over that period of time, I expect to see further weakness on the market and possibly go down into this month and into April. And if we see further weakness on the market, then I think the gold stocks, having a little bit of a pause today, are still going to be doing reasonably well. And I think that you can hold them. It's gold does well when you get sort of massive collapse in confidence on structural issues in like what we're seeing. So the general theme for me, Wolf, is that the markets are going to be edging down lower over the next month, and the gold, I still think, will do reasonably well, obviously, over that period of time. And then we'll see. And then I'm expecting a bounce. At the end of the day, you look around the world at the moment, where are you going to put your money? You're going to leave it in the banks? Maybe not, or certainly not in other countries of the world. You're going to put it in bonds? I doubt it. Are you going to buy property? Not really. So good companies, Wolf, paying good dividends that are still growing, could become still for me the go-to place. Like
new bank, right?
Yeah, well, like we've been saying, it's the Americans call it TINA, don't they? There is no alternative, and I think that still stands for me at the moment with the stock market. The way you look around the world and you see how sort of scary things are. But what's your take on it?
Yeah, look, I pretty much agree with everything you just said. I think there's still a lot of unknowns, lots of uncertainty, even though we've had maybe a little bit of nerves starting to abate, but I don't think we're out of the woods yet. I want to probably, there could be some other things that pop out over the next 2, 3, 4 weeks. So I'm still taking the stance of be very, very cautious. And that long-term theme of, for the moment, if sticking to the value stories, dividend stories, right, and fairly defensive stories in a way, where you've got, like you said, growth and a bit of dividends, that's probably where I still be keeping my money. And if I'm looking somewhere maybe outside of Australia, we talked about the Microsoft of the world, where they've got a lot of cash, the Apples of the world. Maybe that's also the cream of the cream, where you might be seeing a bit of wealth going in, because it's in terms of uncertainty, where do people normally go, with their money? It's the stuff that's going to probably be around for another 20, 30 years.
Yeah, definitely. And I think you feel more comfortable parking some money in Apple and Microsoft, where they've got a few billion in cash,
Exactly.
rather than some other places at the moment.
Yeah, there's not going to be like a bank run on Apple, is it?
No, I hope not. Anyway, now, Wolfie, now there's 2 other important announcements coming out this week. One in Australia and one in America. Could you tell the members of Equity Story what we're waiting for here?
Yeah, certainly. So we've got, first of all, RBA minutes today coming out. So that's going to be interesting, because, we might find some direction where we might be heading with interest rates, or how at least things are going according to RBA. So I'm intrigued to see what the reaction is, because I know that a lot of the economists are hanging on every word, right? And they like to interpret things. Let's see. Plus Thursday, the big Thursday date. That's why maybe also the market might be a little bit hesitant this week. Is the rate decision in the US. So let's see how that goes. And we talked about it just before we went on the video, saying that maybe with this banking crisis that's in front of us, does it sway the Fed to ease off 25 basis points, or maybe just having a pause for a month just to see how things
well I think before that they were looking to do 50 basis points, weren't they?
Yeah.
And I don't think they'll do nothing, because I think that equally will panic the markets, because that's like the Fed admitting there's really is a serious problem. I think they'll go somewhere in the middle, do 0.25, because inflation is still out of control. There's no question about
Yeah,
it.
look,
Wolf,
100%.
core inflation, the highest we've had for 3 or 4 months in America. So I still think the inflation, they haven't got it under control. And how can they? With still very low interest rates compared to where inflation is.
Yeah. One
yeah.
hopes though, Dave. One hopes though that, you know, maybe with this a little bit of turmoil in the markets, maybe that will cool down the inflation somewhat, right, over the coming months. So maybe that's something we needed, a bit of a circuit breaker. We'll see. But you know, we won't know it probably for another 2 months whether that actually has any impact whatsoever.
Well, I saw a dad today, Wolf. We're coming in. He's on the bus, and I know him really well. He's a lovely guy, and I was having a chat with him, and he basically, you know, he gets people in jobs, and you know, high-ranking jobs, and he said, listen, he's never had that many people looking for a job at the moment.
That's a good, well,
right,
it's not a good sign, but it's a good sign, if you know what I mean. From my inflation point of view, but from economy point of view, maybe that's.
Yeah. So I think things even here maybe are starting to slow down in certain sectors. So
I think Amazon cutting another 10,000 jobs or something like that. So that certainly, I think we're heading right direction. It's just lumpy and it's difficult because there are certain parts like the war in Ukraine still fueling a lot of the inflation, and you know, maybe some other things that are not helping at all.
Also, the Fed supporting all these banks going down is supporting inflation. So I don't know. Anyway, what it is good, the whole thing is good for gold at the moment, Wolf. And I think if you know, look at those gold stocks, a little bit down today, but having a little bit of a breather, but certainly all heading in the right direction. So I would argue possibly if you're not into gold, you haven't got any gold, possibly a little bit of an opportunity to actually have a look at some gold plays.
Yep, they're looking pretty good, aren't they?
Yeah, they're very, very good. Now we've had two companies out today with announcements.
Yep.
They're far away. IPL.
Yeah.
So what is going on here? Are they going to be splitting their different assets in the business, or there's talk about it?
What they're doing, they're selling the ammonia plant in the US for $1 billion, if I remember correctly. But what they're going to do then is they're signing an offtake, like so they can actually have access to it, right? So it's like you're selling your house but then renting it, so to speak, right? So that's what looks like they're going to be doing it over there, which is probably, look, they're going to release a lot of cash, of course. And maybe that's a strategy going forwards, where if they can have long 25-year type deals like they've done with the buyer of this, then you know, maybe it will work for them, I suppose. But you know,
so
I still don't have an issue with them as a dividend player.
So what is that? So what the IPL's managing director said, our announcement today represents a pivotal step in the execution of our strategy to enhance the focus of our businesses on the high value technical and service needs of our explosives customers. Right. So we are delighted to be partnering with CF Industries, a world-class producer of ammonia with an excellent manufacturing safety track record. We're looking forward to this journey as we seek to deliver long-term sustainable value creation for our shareholders and stakeholders. So the management believe this is the right way to go. Are you?
Look, it's something that you probably just have to wait and see to see how that plans out. I think, look, when you look at companies like IPL who've got huge plants, right, that they operate, and then you think about the costs, about the capital that's involved in running these things, is it better to be slimmer and just pretty much let someone else run it, and you just have like a supply agreement with them? That's what they're doing, right? I think maybe in this day and age, maybe that, you know, with a high inflation, maybe that's the best way of doing it right now. And like I said, we won't know until we see probably 2 years down the track, right, whether this strategic move is the right thing. And I think, just generally speaking, right, for myself, you know, there's good and bad points with everything. We've seen, for example, you know, like Coles and some of the other Woolies, they don't own their own thing. They just rent it out of the, you know, rent some, like Bunnings, for example. They own the buildings, and Wesfarmers just uses them, and it works for them, right? That's effectively what's happening here. And you know, is it the right way? I don't know. We'll
Okay,
see.
well, you know,
It may work.
on the monthly chart, it's holding above trend. So 8.2% yield. Is this an opportunity?
Look, yes and no. I mean, like I said, it is a dividend stop story that we've got in our portfolio, and I don't mind it. Of course, there's many choices to be had out there. You know, from what I see, what Incitec is doing, I'm happy with the strategy for the time being until it proves otherwise. So for me, I'd rather have a light capital business than a heavy capital business, right? So for me, that's a good thing. So as an opportunity, yes, possibly. You're looking at this one at its trend lines over the long period of time. I'd probably be, if I'm looking for a dividend stock, I'd probably be looking at that one. Yes, is the answer.
All right, thanks, Wolfie. Now, New Hope Coal came out with their results today. It's a little bit skewed towards, you know, they had higher coal prices before, so it's not going to look, you know, it's funny, isn't it? It's up 5%. Everyone's going, everyone's cheering. That's on a monthly chart. Actually, if you look at a monthly, it doesn't look too bad at all. If you look on the weekly, it's not far off trend, but it's not going to be so good the next quarter, is it? With
yeah, well, it's interesting, isn't it? Because they've come up with a report 6 months to the January 31st, right? That's when the actual coal price is starting to come off. So it'd be very interesting to see what the next 6 months bring. And they didn't give a guidance, so to speak, because they probably don't know, and they probably maybe be scared to say that our profits will collapse.
Yeah,
I mean, that's the thing. That's the reality of it. Given, you know, granted, given them, also give them credit, is they've really come up with a very nice presentation today and talking virtue of coal, right? So marketing department probably needs a bonus because they've come up with a very positive picture saying that supply demand is definitely still there for them. That will support coal prices. They also talked about that their coal is the best coal you can get, right? They also talked about transition energy. I mean, everything they've said in there, you know, they've almost made themselves like a green company in that whole presentation. So look, well done to them. But I just want to, you know, I'm numbers man, so I want to see how that sort of pans out. And I'd say, of course, probably while they probably still have a really great year overall, I think the second half, of course, will probably be much lower than the first half because, you know, the prices have really come off. Unless they've got some long dated huge contracts that can still probably draw upon. I think generally speaking, they are heading down. They've hit that peak earnings. I think that's what I'm trying to say. The other good thing about it is that they talked about it. And then again, you know, that's a pretty positive, is they've got options for growth, which is quite interesting, isn't it? We're in Australia, where we're sort of saying that, no, we don't want to see more coal companies, but they do have a little bit of growth in the existing mines.
Okay, it's below trend, so it's not a buy. So we just need to sit back up the trend lines and start trending up again. I think to see that, we'll just most probably see the coal price get back to maybe 250 or 300.
Yeah, look, I think credit is due. They've done a good job. They're profitable beautifully. They've paid extra dividends for everyone, so everyone's probably made to make money. And when you look at the coal prices, now they've come off. Now let me just have a quick look. Hang on a second, because that's going to be quite interesting as well. And I think maybe, you know, the price drops now is done enough for me, coal, whether maybe that supply demand is going to be enough. So let me just have a look. Where is the coal prices? Hang on, because that's going to be a big one for us to see. There we go, coal prices. So it's been actually steady today, right? Everything's been joined. It's still going down slightly, so 5.5% down. So I'm just having a look at the chart of coal. It's still 173 now, right? So it's still heading downwards. But when I look at the longer term picture over, is there support somewhere? So you may be looking at 150, right? So maybe we're closer to the bottom than we anticipate, and you know, but the market could look on this favorably. But I still look, to me, this jump is like an opportunity to sell into their strength. To be honest, that's how I look at it.
Well, that's exactly what the charts are saying. It's saying it's not trending. It's like a good bit of news, but you know, it's a much better time to own this.
That could be a bit of shock next half, where people go, hang on a second, when they're going well.
All right, Wolf. Listen, thank you very much for that. So IPL, good dividend stock, possibly a sort of opportunity. New Hope Coal, the coal just doesn't look that good, so stay well away. And these markets, we're expecting continued weakness into April. Gold should still be strong and maybe an opportunity if you're not in a few gold plays to get some. Apart from that, hold on to your hat, Wolf.
Absolutely. Holding on. Let's see what happens, because Thursday's a big day.
All right, and now tonight we are live, so we can go for everyone's stocks with you.
Mhm.
Live at 7 o'clock tonight. Ask the analysts live. We can look at the stories. Should we buy them? Should we sell them? Should we hold them? The best part of what we do here at Equity Story. So Equity Story live tonight at 7 o'clock. All right, thanks, Wolfie.
See you guys.